Welcome back. Well, it is quiet for the market, so let's talk about a couple of stocks which have been clear outperformers. One of the stocks that I am talking about is Gensol Engineering. If you just look at the 52-week low for this particular company, it stood at around 300 odd rupees, and currently the market price stands at around 1160 odd rupees. So it's been a huge outperformer from say a year ago in terms of levels, and if you compare it to its 52-week high, which was at around 1990, there's still some way to go to get back to those levels. So huge outperformer. What's going on with the company, and what does business look like? We have Anmol Singh Jaggi, who's the chairman and the managing director of Gensol Engineering, joining in to discuss the company's business outlook. Mr. Jaggi, hi, welcome to the show. Well, I was just looking at your latest update. For the fiscal FY23, you've indicated that you've seen an income rise of around 144% to 391.6 crores, largely led by your renewable energy segment, as well as, India's commitment to climate change. Just tell us, out of this 391 odd crores, how much is basically coming in from renewable energy, and are you anticipating the similar kind of growth rate going into the next fiscal?
Hi, good morning. Thank you for having us. And I would want to say that, of course, the last year we were 100% just focused on renewable energy. But going forward, our company is also diversified into electric vehicle manufacturing. So in FY24, you would see revenue coming in from electric vehicle manufacturing too. But for FY23, this 391 crores, which is the unaudited number, is 100% of coming from renewable energy. And when we come to the outlook for the future, I think we've already indicated to the stock exchange that today the company is sitting with more than 1,000 crores of order book, and there is a huge amount of deal win pipeline that we are sitting on. So we expect that if God is kind and everything in the world seems good, we should be clocking much higher revenues than what we did in FY23.
Right. All right. Hi, Anmol. Good morning. Thanks so much for joining in. Anmol, clearly FY24 is going to be the make or break here, right? Because the street is anticipating a big growth from year on 24, and then they're looking up even for 25. You had made some projections in 2022 itself. Now for FY23, I think you've fallen a little bit short of those projections because that EV vertical didn't really pick up for the past year. But bulk of that is going to come in FY24, as you said. So for FY24, what kind of number are you looking at in terms of revenues? You've also announced an acquisition, a month and a half or so ago, that Scorpius Trackers for around 135 crores. So including that, what is the revenue contribution and how much of it comes in from this inorganic growth?
Sure. So what we expect is that given that we are entering the year with about 1,000 crores of order book, we expect, and the deal wins that we are expecting very soon, the solar EPC business, which is the renewables business, should clock more than 2,000 crores of revenue, including the acquisition that we have just made. The acquisition is under the consummation process, and we expect that by 15th May, it will get consummated. And with that, all the revenues that Scorpius also does will get added to the revenues of Gensol Engineering. My expectation is that Scorpius Trackers will add in the complete mix of 2,000 crores, about 300 to 400 crores of revenue will come in from this acquisition. Also, from a Scorpius perspective, it is a much better margin product. Gensol Engineering renewables business runs at about 6% PAT margins. Scorpius business runs at about 15% PAT margins. So hence you would expect that actually the Scorpius deal will help us improve the margins going forward. So it's not just going to help us with top line, but also going to be very important for our bottom line, as Scorpius Trackers is an extremely complex technology company, and we are very thankful to the Scorpius team for joining hands with us, and we believe that this is going to be the future for how renewable projects will get set up using tracker technology.
2,000 crores from this business, but what about for the entire company? You're factoring in something from EV, right? EV manufacturing and EV leasing. How much is that?
Sorry, you mentioned about the EV.
Yes. How much, 2,000 crores is from your core business, including the inorganic growth. What about for the remainder part of the business, which the street is very excited about? That's the EV manufacturing as well as the EV leasing. How much could we factor in from there? I'm trying to get a sense of the consolidated entity. What could revenues look like?
Sure. So on the EPC side, like we mentioned, including Scorpius, we should do about close to 2,000 crores. On the EV side, what we expect is that our plant is going to start production from July, and it'll start. Our production capacity is for 30,000 cars a year. We are going to start small in the first month and then gradually ramp up. We expect that we will hit the full production by September, which means that for this year, the EV business should roughly contribute. We should sell about 10 to 12,000 cars, which would mean that about 500 to 700 crores of revenue will flow in from the EV manufacturing division, which means that on a consolidated basis, we should, on the EPC business, doing about 2,000 crores, which includes Scorpius, and the EV manufacturing adding about 500 to 700 crores. So all in all, it should be close to 2,700 crores of top line that we are talking of for FY24.
Okay. This 500 crores in terms of cumulative order wins that you had announced in the month of Feb, has execution begun? Where do things stand?
Yes, ma'am. I think India is on the very fast pace to use renewable energy and to grow the complete power sector. So we are seeing that there is extreme pace at all ends. I think all government agencies, all private agencies, all suppliers, all manufacturers are all kind of primed up for this kind of growth and for this kind of fast execution. We expect today that order win that we do basically gets completed in less than 9 months of the order being picked up from the customer. So execution is starting. I can tell you that the moment we sign orders, the very next day our team is fully active and is wanting to finish those orders and those projects.
Okay, so that's actually my point. Execution within 9 months of receiving the orders. So I guess execution is on for those orders worth around 500 odd crores. Just a quick question: how much cash do you have on books? How much are you generating at this point? Would you look to deploy it in terms of inorganic growth, considering that the pace that you're growing at? For the inorganic growth, rather.
Sure. So we don't expect to do any inorganic growth more in FY24. We have done one, which is Scorpius Trackers, which we believe will do a very big value addition to our technology strength. But beyond that, we are not looking at anything. From a cash perspective, I think last what I remember, we had about 190 crores of cash balance with us, and we are a cash generating business. We are a profitable business, so we generate cash every day of our lives.
Okay. All right. Very quickly, Anmol, before we let you go, just want to confirm, you're sure, right? Middle of this year, manufacturing starts, because that date has been postponed a little bit. So you're sure on that, and all approvals have been received as well.
Yes. So we expect that July should be the timeline.
All right. Very quickly, you're going to be looking up in terms of revenues, profitability as well. You have put out a projection of 175 crores odd. Any dividend policy you'd like to announce? Because I'm looking at, I don't think you've announced any kind of dividend. So a dividend policy will be something that you'll be considering in the time ahead?
Sorry, I couldn't get the question.
Dividend.
I don't think we are talking about any dividends as of now. We would put all cash in the business and try to grow the business. Of course, dividends are extremely important for a shareholder return perspective. But what I believe is that we are more concerned and that we should retain the cash in the business and try to. There's so much to expand and there's so much to do that we would be reinvesting all the money in the business itself.
Okay, all right. We're going to leave it on that note, Mr. Jaggi. Thank you very much for joining in and speaking with us. So that's Gensol Engineering. Fired away in the past 1 year in terms of his stock performance. As of now, however, we need to take a short break. We'll get you more on the markets and the Apple Store opening once we're back. Stay tuned.